Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, November the 22nd, 2024. Bitcoin keeps rallying, but nothing goes up forever, and we'll soon see a retrace before we move higher. We are somewhere in this third wave, this one here. This is where we are. We are probably somewhere here. So we still have plenty of upside to go, and we're going to wrap up eventually the final fourth and fifth waves. But we're not there yet. And we believe this can easily go to 150, potentially 400,000. Yes, you heard it correct, 400,000, depending on which final extension Bitcoin will choose. 200%, 300%, 400%, 500%. That we don't know because we cannot predict the future. So we are now starting to wrap up the fourth and fifth waves for Bitcoin. But nothing is created equal, and some are doing worse than others. So let's go over Binance Coin, for example, which keeps kind of slacking. Ethereum, yeah, still a little bit up in the air, but we'll give it the benefit of the doubt. Meanwhile, Solana is doing great. Some of you have given suggestions for bringing up other altcoins like Cardano again. And unfortunately, I have not had time to look thoroughly at those charts, but those look reasonably bullish, though we don't think they're in a new massive bull market like Bitcoin, but just in a bounce. Once we get time for those, we can provide an update. Again, we like to focus on those ones that really work. So we're also going to cover Mara and Riot, which now have better setups after some wild price action over the last couple of weeks. And remember, regardless of what market we're in, always have stops in place, okay? Always. For any time frame you trade, it will protect all your assets. Why? Because few people have a exit strategy. Anybody can enter the market, but few people have a solid exit strategy. If you don't know what a exit strategy is, look it up or contact me. And if you then still haven't figured out, you should not be in the markets. It is the most important thing of all. Anybody can buy. Few people can correctly sell. All right, so that's really the difference. I went through all the slides. Let's start off with Binance Coin. As you can see here, hasn't done anything since the top in mid-November. So this can still be this B wave, okay? Very inconclusive. So far, another failed breakout. It is just at around 60.20, which was the breakout level we were looking for. It's currently at 16.1979. Yeah, so this can still be a B wave, okay? I need to see further confirmation that we are indeed in a new bull to 850, potentially 1,000 for Binance Coin. So again, the price action does not yet look conclusive to me in the sense of, yes, that is a new bull market. Then we're going to go to Bitcoin. It is still in this blue wave 5, which is extending with the target zone anywhere between 97,356 to 101,200. 101,200. I was not thinking I would say that this soon already. 6 digits, my dear friends. And yeah, I sent out emails to previous members saying you all left when things looked the most dire. Well, we've been bullish ever since September last year. You know, please rejoin. And it's crickets. It's really crickets. It's unbelievable. So still, people do not believe in Bitcoin for whatever reason. They'll believe once we get to 400,000, and then it's of course way too late. And it's such a shame. It is such a shame. I would like to maybe they're long and go like, we don't need your help. That's fine. I don't think so. Majority of people are not. Anyways, so. That's my rant. It is always mind-boggling how masses think, and I don't want to piss on anybody's turf. That I don't want to, but it's interesting because what we're dealing with Elliott Wave is mass psychology, right? That's what we're dealing with, because it is the cumulative opinion of everybody what makes price, right? So that's what we're dealing with. So. Wave 3 should be on the way, then a wave 4 pullback. I don't know if we're going to go this low, but somewhere around, I would say 88,000 plus or minus 2,000 seems to be a very good wave 4 pullback. Then a wave 5 into almost 110,000, somewhere around there. Another pullback, another big rally. That will then conclude red wave 3 of black wave 5. Then we get a red wave 4 and a red wave 5. Okay. So again, these targets are, of course, not set in stone. They are variable. It all depends on what Fibonacci extension Bitcoin is going to choose. 300%, 400%. We don't know beforehand. We start off with 200%. Okay. Most of the time that is too conservative for cryptos, but it has happened. And then we go, okay, well, blasted through it, as you can see here, 300%. Well, blasted through it, 400%. Okay. That's how we go about. And that's why we have our stop loss or warning levels for the bulls in place, and we keep raising them as price moves higher. Those are, of course, much more important than these somewhat variable price targets due to massive extensions. For the usual stock market, they work pretty well. For cryptos, it is definitely more variable. So again, as long as we hold above yesterday's low, we can allow for higher prices. That is our first warning level. The second warning level is about 92,500. The third warning level is right here at this blue wave 4 low at about 88,000, maybe a little bit lower. And then the final one is here at 73, 74,000. Okay, so ways to go before this bull market tells us it's over. And this is the weekly chart. I haven't shown this in a while. The symmetry target was 89,000, well surpassed. These are often conservative targets, by the way. It's just an initial target, well passed. All right, we're now almost at 100,000. Look how strong the RSI is. Higher prices to be expected. If we do a massive bull flag, you can see this can go to 115,000, okay, easily for this wave 3. Then a wave 4 and a wave 5. I've kind of shown a very large target zone for wave 4, anywhere between, I know, between 63,000 and 86,000, assuming a top at around 107,000, right? For that wave 5, somewhere, maybe it should go a little bit higher. Let's do that a little bit higher. Let's do that red arrow. Okay, so we're going to go to 115,000 lower end for that one. And then we'll see probably a pullback to about here. Why? Because fourth waves can be quite huge. As you can see here, this red wave 4 did a 50% retrace. Okay, this black wave 4 here on the left-hand side of your screen did almost a 61.8% retrace. And this would bring us all the way back to the breakout. Wow. And then we get the final wave 5 of 5. Okay. And that one can then propel us much, much higher. So for now, we are comfortably long, and we're going to add some warning levels, of course, for the bulls here as well. I would say the first one is this week's low. Now let's put it at last week's high. Okay, that is the first warning level for the bulls. Okay, and then we're going to add the second warning level, and that would, oops, no, not vertical line. We want to do horizontal. Then the second one will be, of course, this week's low. Okay, the third one, which will be a direct hit, but doesn't make the ship sink, will be the previous week low there. I'm going to actually lower it even further to the breakout there. And then, of course, the final is all the way here, right? That's the final warning level. So you can see what a huge playroom the bulls have. Yeah, room to play. Excellent. So moving on to Solana, we have technically enough waves in place now at the 265 level. Again, massive extension. So this means the red wave 3 will also extend possibly higher than 280 to 85. We should now be in this green wave 4 soon. Negative divergence is starting to develop and creep in more and more. And so we have the warning levels in place, but those are from yesterday. So with the higher prices, we can raise those. The first one is now at about 248. And the second warning level will be at somewhere around here, that we are in this green wave 4 at about 237. And the third warning level for the bulls will be just below. Okay. And then the final one will stay here at about 200. Meaning if we go below 200, odds are that this is not a wave 4 anymore. Okay, so we start to prefer to look lower on this one. And let's see how this is going to transpire. Can always sub the fight. So that's why we have the warning levels in place. And that's why we raised the warning levels. Ethereum, a little disappointing here. I would have liked to see a follow through from yesterday's candle, but on the other hand, still looks like a digestion of that massive 9 to 10% candle. Still looks impulsive to the upside and corrective to the downside. Okay, so we might have a 1-2, 1-2, and then 3-4, 3-4, 5 into that ideal target zone of around 3,700, which will be a retest of this downtrend line that connects with the all-time highs. And that then will bring us to this symmetry target as well. Okay, so far so good. Moving on to the miners. Mara, look at this. This is quite the whipsaw, as you can see here. And this price action here from September into November reminds me a lot of this price action. I remember I counted this as a expanding leading diagonal, but I was proven wrong. And maybe we finally have it. Okay, the reaction so far is much better. Again, we have our A1 top here. Don't look too much at the wave degree here. I have as a primary, but I can also count it differently. As you can see, a degree lower. It's a little bit potato. But I think what's the conclusion here is that we are moving higher. This looks quite bullish, that we've bottomed for this wave 2 and are now in wave 3 of this blue 3/C wave. So we have an ABC lower, an ABC higher, and then 5 waves lower. 1, 2, 3, 4, 5. Okay, so far so good. I like it. And then this expanding leading diagonal with a massive overlap above, of course, the trend line, and then a massive quick decline, and look at this, back up again. And all we need to do now is break above this 27.5 level, right? That's the B wave high, and then we can target already in the low to mid 30s. Moving on then to the weekly chart. The weekly chart shows a bullish candle. Okay, we've bottomed here in September, right in the ideal B/2 target zone. Also here, clear ABC higher. Here you also see a expanding leading diagonal wave 1, similar, but of course in a bigger form than what we had here over the last couple of months. And this is over the last year and a half almost, okay? See kind of similarity, this overlapping price action. So ABC lower, and this week's candle looks quite bullish. If we can close above last week's high, that'd be really bullish, because then we have a higher high in place. And again, we're now above the Ichimoku cloud. We're above all the moving averages, the 10-week, the 20-week, the 50, and the 200-week. And soon these ones will also be bullishly stacked. Okay, then the intermediate to long term is bullish, and we start looking for 44 to potentially 63. 44 is a CSA, 161.8 is a C is 100/3 target zone, most likely a third wave. All right, moving on to the monthly time frame. I know the month of November is not over yet, but finally we broke above all these moving averages that I've had explained before. We need to get back above the 10-month, the 20, the 50, and of course the 100-month. And we held above the 100-month, and we're now back above these shorter term moving averages. Of course, they're monthly, so they're in essence long, but from the monthly perspective. Well below the Ichimoku cloud still. So we still have resistance here at about 32, which is the previous high, okay? This is the most bullish wave count. 1, 2, 1, 2, 3, 4, 3, 4, 5, and we're going into the triple digits easily, okay? That's possible. Then this was wave 1. The 2020 to 2021 rally was wave 1. This was wave 2 into the 2022 low, and then we have a 1 for a leading diagonal, a 2, and then a simple, and then a complex wave 2. So simple 1, simple 2, 3, 4, 3, 4, 5. This is the most bullish wave count I can come up with. So far, I have nothing too bearish other than bigger picture-wise. This could be, as I explained earlier, a C3 wave, right? That is, of course, and we don't know yet the extensions. Again, we can't predict the future. But what we do know is that typical C waves target 100%, and typical third waves target the 161.8%. Okay, so we'll just let that one, of course, transpire and see what happens. And this is all, of course, contingent on holding above the warning levels. The first warning level on a weekly basis is last week's close. The second warning level is this low here from 3 weeks ago. The third warning level is, of course, the August/September low. It's quite at the edge of the month. And the final warning level for the bulls is, of course, the 2022 low here. Okay, so that's ways to go. And of course, if we already break below 13, I would say, it's time to lick your wounds and move on. So monthly candle looks pretty strong, but we need to see follow through, and a break again above 40.41 would be very bullish, because then we get back above the Ichimoku cloud on a monthly basis. All right, moving on to Riot. Last but not least, we have an impulse up from the September low into the November high. 1 2 1 2 3 4 3 4 5. Okay, very extended wave 5, classic for this type of tickers, and we should now be in this wave 2. Okay, and the target zone for the wave 2 is shown here, and yes, we can go back all the way to about $8.50. That's the 76.4% retrace, which is the low for this wave 4. So I've placed the wave 2 here, but I must be honest and of course say, question mark, right? You can start to see that the miners are diverging a little bit. Mara is already trading here. Riot is still a little bit here, but I think Riot had been front running a little bit as well. So if we then break, of course, above, I would say 13.5, that would be a very good indication. And we follow through above 16, that this wave 3 is underway to at least 20 and potentially 26, somewhere around there. Okay, so we have now, I think, enough waves in place to consider this wave 2 complete, right around the 50% retrace of this wave 1, which is typical for a second wave / B wave. Of course, we don't know yet, but if it's a 1 2 3 4 5 or a ABC. But for now, you get the idea. So we've broken below the first warning level for the bulls. We're holding above the second warning level. We're not even below the third, and definitely not below the fourth, which is at 640 or something. So this still looks pretty good to me, in my humble opinion, for continued rally. And as you can see here, this is a strong trend line, and I'll zoom out a little bit, going all the way back here to the 2023. And that's why high, and of course the 2023 secondary high, the 2024 highs, and that's why it's so critical for this one to break above it. If it breaks above it, I think it will be a very nice, clean, clear signal that good times are ahead. And again here, so the target zone is anywhere between 20 to 26, depending on if we get a C wave or a third wave to be determined. That we don't know yet, but we'll get there eventually. First, hold the lows, hold above the warning levels, then break out, and once we see the breakout, we can move confidently into this 3/C wave count. All right. So of course, this is a critical resistance. Miners are fun. Why? Because they can run as much as, of course, the cryptos can run as well. So let me see here. Let's put on the logo. That's my work, nobody else's. And I hope you appreciate these. It's a nice way to also get exposure to cryptos if you don't want to invest in them, of course, directly. And let's look up the ETFs then that trade the cryptos. Haven't mentioned them. The BITO, the IBIT. Of course, you have GBTC and all those ones. BITO looks good here for this wave 5. Still underway. Still looks like a diagonal to me, with probably some potential breakout. It's normal for it to happen. Otherwise, it's just going to be a standard impulse eventually. So nothing out of the ordinary yet. We're still in this orange wave 5. We're just waiting for that one to wrap up. And then we go to IBIT. It's probably the same, right? And IBIT there, let's see, should still be in this blue wave 5 of the orange wave 3. And then, of course, we get the orange wave 3 pullback, the orange wave 5, etc. Okay, so we're still a long ways from a final top. Let's raise the warning levels for the bulls, of course, with the higher prices. The first one is yesterday's low. The second one is, of course, this third wave high. The third one would be this fourth wave low, and we'll keep that one the same. Why? We don't want to see lower lows, okay? Still possible, but we just don't want to see it. Why? Because yeah, we don't like lower lows. There. And then there. And we're going to move this one to about there. And we'll keep this one here, okay? The red one. So it looks good. I'm fine with all this. And I personally have no exposure at the moment. I'm just waiting for a pullback in these ETFs, for a pullback that will provide me with a low risk buying opportunity. Now this becomes a more high risk buying opportunity. I'd rather see these things like the RSI at 50 potential, of course, at below 30, because those are the much better. But because I've already scaled out of my positions personally in these ones, and it's been a great run. Put money somewhere else, or have it sit on the sideline, and then move on. That's just my trading. A lot of people are hodlers. It's good as well. They just want to know we're topping or not. No, we're not topping. All right. Take care. Trade safe. Have a great weekend, and I'll catch you all next week.